Hey TMFG community, Carlo Cancino here with John Yaconetti, and in today's Ask TMFG episode, we'll be discussing what to do in a bear market. So if you do like our content, please subscribe to our YouTube channel, give us a thumbs up if you like our content, or provide us some feedback and a comment. This past month, the S&P 500 entered bear market territory, and that means dropping 20% from the latest highs. And we expected to have tough conversations in our meetings, and we're having them. But the same question remains is, what do we do in this period of bear market? Are there things that we should be thinking about? So we thought we'd take today to discuss what we talk about in our meetings. So John, why don't you take it away from here?
Perfect. Thank you, Carlo. So just like you mentioned, the U.S. market had entered into bear market territory this month. And with that comes a lot of stresses for a lot of people. Due to interest rates rising, portfolio struggling, and high inflationary periods, this is causing a lot of stress for investors today. However, if you're stressed about your portfolio now in the market, there's likely a better way to invest. And we're not guaranteeing that, investing in a different manner is going to lead to higher returns, because first of all, if anyone guarantees that, you probably should stop the call there and stop listening. This is about having a plan on how to invest, and primarily focusing on the aspects that you can control and trusting the market as a whole. So to lead us off, first we want to ask the question, why are you investing? Are you investing for the long term? Are you investing for certain goals? Because really, to develop a plan, you want to have certain goals that you want to achieve. So is that retirement? Is that saving up for a house? Focus on why you're doing what you're doing, and suddenly the time frame of a short-term market downturn suddenly isn't as important anymore, and you're focused more on that long-term goal that we discussed. Next, determine a portfolio strategy based on stocks and bonds that's most comfortable for you. It's figuring out what risk tolerance is most applicable for you, what you're most comfortable with in terms of that market volatility. The more stocks you're in, the more volatile your portfolio will be. So market downturns like we're facing today are much more dramatic. Or if you're more into bonds and GICs, then suddenly that volatility isn't as strong. However, what does come along with that is the risk-reward trade-off. The more risk you have and the more stocks you have in your portfolio, the more volatile it'll be, but the more return in the long run. And finally, focus on the things you can control. So primarily that is your spending habits and your savings habits. Now, in a time like this, the markets really are out of our control. But what we can control is what we do on a day-to-day basis. Especially in periods like today with high inflation, focusing on where your money is going in terms of your expenses and also allocating a certain portion of that to investment, especially now when the markets are down, can actually lead to better returns over time. Now, structuring this portfolio or structuring this allocation is the easy part. The difficult part is staying invested. And if you find yourself tempted to deviate from this plan, again, think back to those goals that you set out for yourself originally. If it is for the long term, making short-term changes is more on the basis of gambling. We don't really know where the short term is going to take us. However, when we focus on that long term, suddenly the picture becomes a lot clearer and it's a lot easier to stay focused during that time. The important thing to know is that this does happen in the stock market. A recession is very much a part of the business cycle as a whole. Downturns in the markets are very normal in terms of what our history has shown us. And we have discussed it in a video in the past, but I believe from the last 96 years, we've had about 17 bear markets. So these things do happen. But over that period of time, we've seen the stock market grow at a very fast rate. So how you're able to stomach these market downturns, focus on the long term and how you're invested, and control what you can control today is what's going to lead to the most success for you. Carlo and I have seen over our careers that how creating a plan has really benefited some people and creating a plan that works for them. We understand everyone is different, but at the end of the day, the markets are the same for everybody. It's how you choose to react to them is what's going to lead to the utmost success.
Thanks, John. In everything that you said, those are things that we repeat regularly in this type of market volatility. And people should take comfort in that because our recommendations are consistent. We're not being speculative in any way, shape, or form. We know what our plan is. We know what we can control and what we can't. And so we stick with the original plan and investment strategy. And we'll continue to do that while we're managing your portfolio for you. So that's our Ask TMFG for this week. Like I said earlier, if you do like our content, please subscribe to our YouTube channel, give us a like on the channel, or provide us with a comment. Until next time, I'm Carlo Cancino.
I'm John Iaconetti.
And this has been Ask TMFG.